Recyclico, making lithium-ion last forever. Recyclico's patented recycling process achieves up to 100% recovery of battery metals from lithium-ion batteries for electric vehicles, including cobalt, lithium, nickel, manganese, and aluminum. Recyclico Battery Materials Incorporated trades on the TSX Venture AMY, on the OTCQB AMYZF, and Frankfurt ID4. For more information, visit recyclicode.com or phone us at 778-574-4444. Recyclico, making lithium-ion last forever.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ted Dixon, CEO and co-founder of IncResearch.ca, Canada's first online financial news and research service providing insider news and knowledge to investors. His website, CanadianInsider.com, home of the Canadian Insider Club. Welcome back to the show.
Jim, thanks for having me back.
So how are the insiders viewing the Canadian and U.S. stock markets?
Well, heading into year-end, we're seeing a bit of volatility in terms of the oil patch. So in Canada, as these oil and gas stocks, kind of have faced some headwinds here with the volatility in the oil price, insiders have picked up their buying. So that's an encouraging sign that they're not being dissuaded from buying despite the volatility, which leads us to kind of believe that the weakness we're seeing in oil and gas right now is probably mostly driven by seasonal factors. The fall tends to be a weaker period, especially as you head towards mid-December, November, and we're seeing that now. And generally, insiders are using that as an opportunity to add to their positions on weakness. In fact, we upgraded our energy outlook indicator reading, basically, for the Canadian oil patch to fair valued from overvalued just in the last week. So, and people can read that on CanadianInsider.com if they're a member in our weekly market update.
Now, Amazon says it's going to build a wind farm in Alberta. Is that competition for oil at all?
Well, this is the other big question. Okay, we have the seasonal factors, but how much is alternative energy sources competing with oil and natural gas? And you've got different strong views on it. And right now, I mean, I still tend to think that it's seasonal factors that are at play. Over time, we may get more competition on the energy side. But if you look at what's happening with these alternative energy stocks, solar, even lithium, as an EV play, Tesla, as an EV maker, I mean, they're facing some headwinds as well. So it's not like investors are kind of pointing to a clear shift here that's benefiting one group over the other. So at this point, I would think that it's more sort of seasonal and maybe worries about a recession that are impacting these stocks as opposed to structural shifts, which may over time may become clearer. But last time I looked, traditional energy still had the biggest market share of generating power and and providing fuel for transportation. So that could change over time. But I think in terms of the valuations you're seeing in these oil and gas stocks, that's been baked in for a long time. Taking a look here at for example, in the Canadian oil space, when we look at, I'm just pulling this up, so it'll just take a second. I mean, the valuations for the sector are still really low. for the energy sector, it's 9.3 we have as the average PE, trailing 12-month PE versus market of, just under 15 in Canada. So I think for a long time, the investors have been downgrading energy in terms of that whole transition. And I got to think that a lot of that is already baked into the valuations, but the current volatility that we're seeing is probably due to other sort of cyclical and seasonal factors.
Any other areas that insiders are taking a real close look at right now?
Well, in Canada, we've had a nice bump in industrial insider sentiment, which is interesting. That kind of caught us by surprise, and it's not a huge group in the Canadian market, but it has some interesting companies in it. We've written about one this week that's where insiders have bought on weakness. You've got some. You have a range of companies where insiders have been buying, whether it's in trucking or in infrastructure, engineering, the like. So, it's the recession gloom that it always seems to be in the market. There's always a group of people predicting a recession at any time, and eventually these calls will be correct. But in terms of what we're seeing on insiders, maybe we'll get a recession, but we're not getting in Canada a lot of interest in exiting the market. Our Canadian Insider Index, which looks at all the the Canadian Insider Sentiment Indicator, which looks at insider sentiment across the board, is actually just looking at it now. Boy, we began the week just slightly over 100, and we're already at 170. So that means there's 1.7 stocks with key insider buying for every one stock with key insider selling, and that's as of November 15th. So it's looking, they're buying the weakness here. Doesn't mean, again, that things are going to shoot up. Look, we're going through tax loss selling season, and that's where, there's propensity for some investors who have lost money on trades or have losing positions that haven't crystallized them to crystallize them into year-end, sell their losers, take the tax loss to offset some of the winners. So you can imagine if some people had the Magnificent Seven, exposure to some of those stocks and have taken profits, maybe they'll be selling some of their beaten down Canadian resource stocks, and that could put pressure here into year-end. But we're seeing, as I said, insiders are more likely at this point to be buying than selling here into year-end. But, don't expect a 30-day rally off of that. That's typically a 12 to 18-month horizon that we would look at. But so it's good to see this insider activity perking up here on this volatility, and it's really kind of getting to the crux of the matter. You really kind of want to buy low and try and sell high, and when people are selling, it's the hardest time to be buying. But that's what we see insiders doing right now. They're really picking up their buying, and that's an encouraging sign.
How are government attitudes towards resource development, Ottawa, the provinces?
How are they doing, or how are they implementing things?
How are they implementing things, putting up roadblocks or helping people out getting, especially now that First Nations are now being properly consulted and included in the development, and most seem to like it, with a few, of course. You can never get 100% agreement on anything.
Right. I think in Canada that's so important, especially in British Columbia and Ontario, and I would also suggest Quebec. And we've seen some projects that get it right, and off they go, and it's beautiful. I mean, in British Columbia, if you've got your First Nations on side and you've consulted with them and you've brought them into the process and have agreements with them, things can go well. If you don't have that, if you've taken, or if you thought you had that and you took your eye off the ball, or if you do have it, you keep your eye on the ball and something happens anyways. I mean, that's unfortunate. But generally speaking, if you've got your agreements in place, it can be quite good. So it's really incumbent upon investors to look project by project at how the management teams are handling the First Nations. They may all say, "Oh, we're consulting and this and that," but do they have agreements in place? What type of agreements are they? Are they sort of MOUs where they're agreeing to talk, or do they actually have benefit sharing agreements in place? And those are big differences. Once you've got a benefit sharing agreement type arrangement in place, I would look at that as being a lot more solid than just saying, "Oh, well, we're consulting." So it really, investors really have to do their homework, especially in BC. Ontario tends to be, I think, more of a regional issue. Some parts of Ontario are fine; other parts of Ontario are problematic. I don't profess to be a First Nations expert, particularly in Ontario, but there's some. I think you just have to really, again, look project by project, where are they located, and what's the First Nation situation in Ontario. And the same is for Quebec. Quebec, it's often touted as a good jurisdiction for mining. I'm beginning to question that.
Why is that?
Well, I just don't see the Quebec government permitting process working that quickly when it comes to actually getting a mine built. I see they are handing out permits, drilling permits. Drilling permits seem to be processed pretty well, depending on where the project is. But I think as you start getting to extraction, actually wanting to make money and take things out of the ground, I'm not as convinced that Quebec is competitive on the jurisdictional side. But we'll see. I hope I'm wrong on that. I'm watching a couple of projects. I'm not going to get into the exact names, but I would characterize the Quebec regulatory environment as slow.
They love the red tape. Or the tap de rouge.
Governments do, and it takes a real conscious and effective effort at the political side to keep it going. And it's hard, right? Even if a resource minister really wants to push things, doesn't mean he or she has the clout to actually move things on, because you have the environment side of the equation, and they have a different agenda. So it's not government's just not all one big and massive entity. There's these subgroups inside, and they're all have their own mandates and their own agendas, and they often conflict. And and it can be quite tricky. And the good thing in Canada is that there are jurisdictions that I think are very good, that are doing very well. I think Saskatchewan is a bright spot on oil and gas, and hopefully in the area of lithium mining, we have a nice competition between Alberta and Saskatchewan for direct lithium extraction, and it's worthwhile keeping an eye on those two provinces. There was big news this week that Exxon is looking to develop lithium resources in Arizona. Arkansas. Not Arizona. Let me correct that. Arkansas. And but they've got to go through the hoops, the regulatory hoops. So that will be an interesting one to see how Exxon does in comparison to how some of the juniors how they're trying to progress in Canada, in Alberta, and in Saskatchewan. And there's a couple of projects by Canadian companies and one Australian company that's working through the regulatory process in Saskatchewan and also Alberta. And it'll be interesting to see how that unfolds compared to what's happening in Arkansas right now. And there's Exxon, and there's also another Canadian junior down there. So, let's keep an eye. I would keep an eye on those three jurisdictions when it comes to direct lithium extraction. And for those listeners who aren't quite familiar with it, direct lithium extraction is a different technique to getting lithium out of the ground compared to hard rock mining, which is prevalent in Quebec and Ontario, although I believe they're trying to do direct lithium extraction, DLE, in at least there's one project I'm aware of that trying to get off the ground in Ontario. But it's Alberta and Saskatchewan that are kind of trailblazing in Canada because they're looking at extracting lithium from oil fields. So it's all very new, but these projects are moving along. We have a pilot plant. We have one pilot plant that operating or has been operating in Alberta. I don't know if it's still going. I don't know if they've finished for the fall, but they've been putting out results from that plant. And there's a pilot plant, that's DLE pilot plant that's just got going in Saskatchewan. So there's work that's progressing in those two provinces, and depending on the economics of how those pilot projects pan out, and then the regulatory environment in terms of getting to the next stage, the commercial, when moving from pilot plant to production plant, I'll call it, the regulators play a big role in that. So Alberta and Saskatchewan, there's a lot of exciting developments going on there. And for those who are interested in lithium space, that's what I'm paying a lot of attention to. And it's the area I think that has the quickest potential to bring scalable lithium extraction, to bring it into production quickly. Potential, because it has to be proven economically from the technology involved, and the regulators, can't be dragging their feet on it. So both have to prove themselves, the technology and the regulators in Alberta and Saskatchewan with lithium. And it's an exciting time. It's a very critical time for Canada's lithium industry.
Would that lithium from Alberta and Saskatchewan be destined for the newly announced $1 billion battery plant in Maple Ridge, BC?
I don't know. All these companies, will have to strike deals with customers, and listening to the CEOs of these companies, they're always optimistic in terms of what they can arrange. But I don't know. I mean, I think it's. It is interesting, though, that some of these battery plants with all this government funding now, assuming market conditions continue to be positive, they will come on stream years before any new hard rock mine is brought on stream. That is at the early stage, is at a pre-feasibility stage or earlier, right? So there are at least one or two mines in Quebec that are at the permitting stage that are ready to get going. It's like need the permit. One big one I'm aware of. But okay, so those might be ready maybe for these battery plants. But all the drilling that's going on in these hard rock plays in Quebec, this is going to take years. So I think, in terms of Canada providing lithium for, this is my opinion, I'm open, others will have a different opinion, which is fine. I think it's important, though, just to consider the different scenarios, because this is all kind of a new horizon for all of us. But I think the DLE in Western Canada has the potential to provide battery-grade lithium material for these plants a lot faster than sort of the early stage, even PEA stage hard rock miners in Canada.
We'll have more with Ted Dixon right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ted Dixon. Ted, when it comes to jurisdictions around the world, how does Canada rank as a place to do business? Is it hard to get a business going here? Is it hard to sustain? Is it hard to expand compared to other places?
I think it really depends on the business. You know, what whether you're big or small. I think it's pretty tough to be a small business in many jurisdictions in North America these days. I mean, the regulatory hoops, and you know, I mean, and you see it in, you know, in terms of just on Main Street, right? Like in Vancouver, I mean, mom and pop small businesses at the street level are really hard to maintain, and you know, so you've got to deal with the city, you've got to deal with all three levels of government. Anyway, it's very difficult. You know, so I think that. I mean, I was just reading something, on X. Somebody was saying, "Well, how come in Tokyo there's all these small mom and pop restaurants and boutiques, you know, on different, you know, whether it's candy or, and you know, the thesis was, well, it's because of permitting, like in Tokyo, you don't need to have so many parking spaces, and you know, I mean, there's something about the regulatory framework that we've just gone so overboard here on what we have to do to set up a business. That I mean, I think it's showing up in the our declining GDP per capita. Canada, I think, is in a recession right now on a personal level because the amount of GDP per person is going down. Right, the economy may still be expanding on a broad level, but because of the large amount of immigration we've had, you know, it's good for the broad economy in terms of the numbers, but the wealth isn't keeping up. So I mean, this is a big issue, Jim, I think, because the standard of living is falling, and it's not fair to anyone, right? If you're bringing newcomers in and they can't set up a business because regulations are too hard, well, there goes one of your biggest advantages, bringing in immigrants. Like, they're hardworking and they want to contribute. But you know, if you, never mind mustering up the amount of the money you need to pay for rent, or, you know, if you're a newcomer, or, you know, or try and save up for a house. I mean, to try and set up a business, it's incredibly hard. So, you know, Canada, you know, that's where I'm based. So, and Vancouver is where I'm based, is where I'm most familiar with. I think we have a lot of work to do on right-sizing things. You know, I saw someone was saying, well, we need to get on with UBI, Universal Basic Income. Okay, well, hold on a minute, right? Like, you're going to do UBI. You need to have the wealth-generating machine to pay for that. We can't just print money to do UBI. It's not going to be worth anything, right? You're going to go and borrow to do Universal Basic Income, right? Like, that's just going to drive inflation. Even the Bank of Canada, you know, has admitted to that the fiscal spending is helping to drive inflation. So, you know, it's going to be politically popular for the desperate Liberal NDP coalition. And I say desperate because they're being destroyed in the polls, both those parties, well, particularly the incumbent Liberals. I mean, I guess the NDP are always kind of in this sort of 21% area, so maybe they're not quite as
they're
worried,
down too. They're down on the polls as well.
So I mean, it's natural that the governing Liberals are going to try and do something about that. Like that's very rational. But if they want to talk UBI, you got to talk tax reform. You got to talk about regulatory reform. You got to talk about the whole package. You can't just say, well, we're going to cut the pie up, or we're going to give people more money. Well, great, but where's that money going to come from when your central bank, which hasn't actually been, the quickest sheriff to the altercation here, even the Bank of Canada saying, well, this probably isn't such a good idea to keep, pumping out all this government largesse. That train is, I'm sorry, it hasn't got a lot of steam left in it. So in terms of anything heading to a destination that's real, I mean, you can have a fantasy a trip into an inflationary boom that isn't real. And the only way to do it is to deal with these regulations and deal with the taxes. Look, we have to have regulation and we have to have taxes. But how you regulate and how you tax is really important, right? And it's a hard discussion to have. Because as soon as you say, okay, well, let's cut income taxes, yeah, great. I think we should get rid of income tax because taxing people to go to work is, I think, just a bad idea. I mean, that was done back last century, and the progressives love it because they think, well, if you're making over $50,000, you're super rich, so we should grab that, right? And it's like, well, except now you've got wealthy people who can just, come to Canada or who made their money in Canada, and you just go, oh, I don't have to work, I'll just live off of my assets. Well, those aren't taxed, right? And you say, whoa, what are you talking about? Well, you have to have that discussion. You have to have the discussion about consumption taxes. Like how do you tax people the fairest and to keep that wealth generating? It's a really hard discussion to have because you're going to upset a lot of people. That is unavoidable. And I can't see the Liberals wanting to upset very many more people right now. They're not going to have that discussion. They'll probably want to talk about handing out more money. They won't want to be talking about creating more money because that will involve some difficult policy discussions that they in no way have the political capital to have. The only time a government can have that discussion is after they've won an election, they have the political capital, they have a honeymoon. That's when they have to address it, or there's a massive crisis. They can also address it at that point. But please, let's not take that the last choice. It would be so much better for Canada if we could grab the opportunity, the next window. Let's say if the Conservatives were to win a majority government, I don't think that's a slam dunk. But that would be the window to deal with these issues, and they wouldn't have a lot of time. But that would be the window to address the tax system, address the regulatory environment, while the government has enough goodwill to press ahead. If they don't do it in their first year, they'll lose it. They'll lose the opportunity. There'll be all sorts of other problems just inevitably that come along with governing, and the opportunity will be lost. To be honest with you, I'm not all that hopeful about it, but let's just see. I mean, that would be the window. Let's just hope that that's what we choose to do. Otherwise, it'll have to wait until there's a crisis, and then it'll get done one way or the other. I mean, it's kind of like Argentina. It'll be interesting to see what happens there. We're already seeing some interesting developments in Argentina, right? Like Argentina, the current, I believe, one of the sort of the incumbent candidate, I believe, has running on a platform of eliminating most income taxes. So, and that's because they've had there's now a new competitor in the race, a libertarian who, is really wanting to shake up things by cutting government spending, dollarizing the economy, getting rid of the peso. So it's really shaken up the policy discussions in Argentina. So Argentina will be actually quite an interesting place to watch over the next few months as they go through their elections to see what policies are actually adopted there, and they have to change, right? Because they're kind of in this rolling crisis, so they're going to get some new policies. And in Canada, though, we're not getting any new policies. We're getting talk about giving people more free money, and that's that's a mirage.
A study done by the Bank of Canada found that 16% of inflation is coming from the carbon tax. And taxes are rarely factored into the CPI, are they?
Well, they should be incorporated in the calculations, but I'm not here to defend Canada's CPI calculations at all. But look, the carbon tax is complicated in that the government also, except for British Columbia, does give checks to people to cover it. There may be some other provinces that aren't included as well, but I know in British Columbia we don't get the federal government checks. So the carbon tax definitely has an impact. If you were to take it out, it would have a one-time impact on the inflation numbers. It wouldn't. It would help, but it's not a panacea to all our problems. Getting rid of the carbon tax, but it would definitely kind of deal with some of the costs on a one-time basis, and so it's and I mean, you've got the government now. I mean, this thing they did with the Atlantic heat, the heating oil exemption. I mean, the carbon tax has lost its integrity in Canada, and so it's probably its days are numbered. And that will have a benefit, but again, it'll be a one-time benefit, and it's not. I mean, it'll be part. It can be part of the. It can be part of the solution. It's not going to be a silver bullet. It can be a bullet, but it's not going to be a silver bullet because you still have the regulatory issues, and you still have tax issues that that are. I think. We could do a better job collecting taxes in this country. So, there's a lot to fix, but dealing with the carbon tax would be a first step for sure.
Anything else we got to keep an eye on right now, Ted?
Well, the U.S. is an interesting situation. Our U.S. insider sentiment levels are modest at best. They are kind of picking up here, but the U.S. seems to be. Look, the insiders are really focusing on a one stock at a time sort of thing, or one theme at a time. As I put out on Twitter, X, interestingly enough, we see that cruise line and vacation operators are doing quite well in terms of insider sentiment. And why is that? We were thinking, why would these groups be doing? Why would insiders be so excited about sort of hotels, motels, and cruises? Well, you think about it. Look, the government now is on track in the U.S. to distribute almost $1 trillion in interest payments next year. I mean, somebody's finally getting those. When I say finally, for years, savers were getting nothing, and now all of a sudden. Savers are getting checks, are seeing their money market funds and bank deposits. If they've moved it to a decent savings account, it's starting to grow. And some of these savers are maybe older, right? And maybe they're going to now take a cruise, right, and go on a holiday because they got some extra cash coming in. I mean, somebody is going to spend some of that money, right? And so the U.S. has it's a different dynamic there. You've got this economy that's growing, but it's all being driven by the budget deficit. Next year, Jim, 5 to 8% we expect the U.S. fiscal deficit as percentage of GDP to be. Then, I mean, that all their growth is going to be driven by the government, right? So, I mean, U.S. has its challenges as well, and for investors, the question is, well, who are the winners and the losers? So it's interesting that's one group that seems to be potentially benefiting. We're also looking at the financials in the U.S. We've noticed, insiders have been picking some of the beaten down financials. They seem to be rather upbeat in general. Again, I would say it's situation by situation. But we wrote in our U.S. report 2 weeks ago about Santa Claus rally. If there's going to be one, it would have to be led by the financials. So I think that given, it is interesting that we're seeing some upbeat insider takes on the financials. So the U.S. market is, it's going to be a tough one. It's a tough one to play. If you've had the Magnificent Seven, those 7 big tech stocks, it's been great up until recently. But I think going forward, it's stock by stock. I'm not so sure that the Mag 7, based off of insider activity, you just see some of the insiders selling at these stocks, and it's just like, this has just been a great ride for the insiders in these big tech stocks. They've made so much money selling into this rally. I'm not so sure investors are going to be doing as well going forward, and but the U.S. market is so big, there's going to be opportunities there. The hopeful sign is that maybe the financials have stabilized, and of course that comes down to the Fed not doing any more rate hikes. I think that July, we've written about this. We wrote about this in our gold mining report, covering this in September, October. That July rate hike was probably a rate hike too much for the U.S. That's based on like what we saw insiders doing, and they got very kind of pessimistic in the summer, and we saw the financial stocks just basically go downhill after that rate hike. But now, with indications that the Fed is kind of throwing in the towel and not going to be hiking rates anymore, we're starting to see some stability in the financials. And I just don't think they can raise rates anymore unless they really want to risk some big problems in their financial sector. And at this point, with some of the CPI numbers, heading down, it's still not their target, but the Fed's got to make a decision. Do they actually destroy things big time to try and get inflation down, or do they wait and see how things play out? I think they're going to take the wait and see how things play out, and that's probably, that seemed to be an okay outcome for the U.S. market. I don't think it's necessarily going to be great, because you're going to have these continual questions about whether the Fed has already baked in a recession or not. But I think that they stopped. I think that the rate hikes, so there will be some optimism there. We'll have to see how it plays out. Recession concerns versus Fed being done should be good for gold, because once the Fed stops raising rates, that whole mantra, well, gold doesn't pay a dividend or an interest rate, that becomes less prevalent, and you've got more people seeking protection from a potential recession, but also the risk that the Fed may have baked in more inflation by not raising rates as much as they should to deal with inflation. And we would argue that's basically kind of where we're at, because they have to watch the financial sector, and they're going to see how things play out. And if inflation starts to tick up a bit, they'll live with that until they have to adjust. And I think we're many, many months away from that.
Ted, thank you so much for the update.
Jim, thanks for having me back.
My guest has been Ted Dixon, CEO and co-founder of IncResearch.ca. If you have any questions for Ted or for any of our guests, you can send them to info@HoweStreet.com. Our YouTube channel is Talk Digital Network. Find us on X @HoweStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of HoweStreet Media Incorporated.